everybody. Welcome. This is David Linstead. It is my distinct pleasure to have with me today Mr. Howard Mannella. And Howard and I are going to talk about some changes and some new ways of thinking about the practice of business continuity. For the first topic, Howard, when I saw you at a conference a few months ago, and you made an interesting point. A lot of people talk about business continuity as insurance, but you say we really ought to reframe that and think about business continuity as a hedge. And a lot of people might not be familiar with what a hedge is and what that means. Can you talk a little bit about that?
Sure, absolutely. The difference between insurance and a hedge is that insurance is a bet that you're willing to lose. I bet my life insurance broker last year that I was going to die, and he gave me great odds, but I lost the bet and I'm happy to do so. Insurance is not core to most business functions. It's not top of mind for executives because it's not value creating. It's important, but it's not value creating. A hedge is buying down risk with money that has tangible value every single day. Look at Alaska Air. They hedge their fuel costs. They drive down the volatility of fuel cost with money, and that has value every single day. Money center banks drive down their foreign currency cost with hedging so that they drive out their volatility. They know what they're going to pay for foreign currency transactions, and that has business value every single day. And having tangible everyday business value is a lot closer to where executives think and a lot closer to where they put their attention. So framing it in terms of hedging, which is buying down risk, is going to be a much easier sell to operational executives than just merely buying insurance.
So what does that mean? So I can sort of understand if I'm a really large organization, if I'm a mega super insurance, but what does that mean to a small business or a medium-sized business?
Well, it means the same thing on a smaller scale, but magnified. Small and medium businesses, they still have the imperative to manage their risk. They still have the exposure, and I would say their exposure is larger because small and medium businesses don't have 20 locations across the globe. They don't have armies of people working on the solutions of business continuity. They have the same imperative to manage it. They have less capability to invest in it, and yet they still have to do something. So having the fast track business continuity and having the essentials for a small and medium business in terms of how do you manage, what are your risks, what's the play, what's the strategy, and have we practiced, those are just as important to small and medium businesses as they're large. I would say even larger.
Yeah, because the larger organizations, they have more margin to be able to absorb an incident, the effects of an incident, absorb the loss. But the small and the medium-sized businesses, they don't have that much margin. And so they have to be very careful about the incidents that might happen to them.
Absolutely. A money center bank can take a $50 million hit due to a technology outage or due to a storm like Superstorm Sandy, and they can essentially write it off. It may appear in a spreadsheet. A medium-sized business cannot take a $50 million loss.
And so how does that change the way we think in terms of, if we think insurance, that's a sunk cost, we're betting against some terrible thing that we hope doesn't happen, and so we don't want to invest in that anyway. But a hedge is going to continue to provide value and for a small amount of money as an investment.
Right. The key for business continuity practitioners to preach and the key for executives understanding is that this has value every single day, and the onus is on the business continuity practitioner to be able to evangelize that. Once you have a program, you reap savings in business continuity insurance premiums, business interruption insurance premiums. You reap benefits in lower cost of capital from your investors. You reap benefits of improved revenue from market and customer differentiation. You'll be there for your customers no matter what, and you can prove it. All these have a tangible everyday value of business continuity that the that insurance doesn't.